Welcome to the Deep Dive, where we try to slice through the noise and really get to the crucial details you need. Today, we are plunging into a global situation it's getting more complex, more impactful, really by the hour. We're talking about the escalating Iran-Israel conflict. We've seen a really rapid series of events. First, those Israeli airstrikes on key Iranian nuclear facilities, places like Fordo, Natanz, Esfahan, key sites, and then almost immediately after, subsequent U.S. strikes occurred, which, let's be frank, really broadened the conflict quite significantly. And now, in what seems like a direct response, Iran's parliament has approved a measure to potentially close the Strait of Hormuz. Now, it's really, really crucial to stress this isn't a done deal yet. The final call, the actual decision, that rests with Iran's Supreme National Security Council. But just the idea, the possibility of closing the strait, that sends ripples, maybe even shockwaves, through global markets, far beyond the Middle East.
And that's exactly what we need to unpack today. Our mission here is to connect these very immediate geopolitical events to their deeper, much further-reaching economic implications. We'll be focusing heavily on the Strait of Hormuz itself, what it is, why this narrow strip of water holds such immense power, both strategic and economic, and crucially, what its potential closure could actually mean for you, for global trade, for the whole global economy. The goal is to break this down, make it understandable so you grasp not just what's happening, but the really profound why it matters part, and maybe what to keep an eye on.
Okay, let's definitely unpack that, because Strait of Hormuz, it might just sound like another name on the map for many people, but you're saying this narrow passage has this almost unbelievable global significance. So paint a picture for us physically. What are we talking about, and how did it become this vital choke point everyone's watching so closely?
Well, it's fascinating because its physical size is just so disproportionate to its global impact. The strait itself, at its narrowest point, is only about 20 miles wide, and the actual shipping lanes, the channels these massive oil tankers have to navigate, they get incredibly tight, sometimes just 2 miles wide. 2 miles. Now picture this, almost a fifth, like 20% of all the oil the entire world consumes every single day.
20%.
Yes, 20%. It squeezes through this one tiny bottleneck that's somewhere between 18 to 20 million barrels of oil daily, plus huge volumes of liquefied natural gas, LNG, also pass through there. And, this isn't some new threat that just popped up. It's been a flashpoint repeatedly. We saw threats to close it back in the 80s during the Iran-Iraq War. And more recently, too, like in 2019, 2020, it's consistently the place where tensions flare up over transit.
It really is almost unbelievable that such a huge chunk of the world's energy hangs on such a physically small, constrained passage. When you visualize it like that, it highlights the vulnerability, doesn't it?
Right.
So, given that inherent tension and knowing what's riding on it, how fast did the markets react to this latest news, this potential closure? And what are the projections looking like if, worst case, the strait actually does get shut down?
The market reaction was pretty much instant. Brent crude, that's the benchmark for Europe and Asia. Mostly it jumped about 2 to 4% today. Reached around $78.50 a barrel. And WTI, West Texas Intermediate, which is more the U.S. price marker, hit about $75.30. There was a brief spike, even higher, over 3%. Right now, things are sort of holding. Markets are trading in that, say, $77 to $80 range. A lot of that is because everyone's waiting on a key U.S. decision expected in the next couple of weeks or so. It's creating a bit of a holding pattern. But if Hormuz were actually closed, the projections get quite serious. You look at Goldman Sachs, their warning prices could shoot past $110 a barrel if it's closed for just a month. JP Morgan has projected a surge, potentially $100 to $150 in a sort of worst case full blockade scenario. And Citi's estimates are interesting. They see maybe $75, $78 if only, say, 1.1 million barrels a day are disrupted. But a full blockade, they're talking $120, maybe even $130 a barrel.
Wow, those are definitely eye-opening numbers. Makes you wonder, is that purely logical market mechanics, or is there a bit of, panic priced in there already?
There's always a bit of both, I think. Fear plays a role.
And it clearly goes way beyond just the price tag on a barrel of oil, right? This isn't just about fuel costs. What are the wider ripples?
Yeah.
The broader economic, the trade repercussions, and who really gets hit the hardest if this escalates further?
Absolutely. It's much bigger than just oil prices. If you connect the dots, these rising tensions, they immediately mean higher shipping costs. Insurance costs, too. They skyrocket. Why?
Yeah.
Well, it's simple risk, right? Sending hugely expensive ships and cargo through a potential conflict zone, that costs more. Insurers demand higher premiums.
Makes sense.
And then those higher energy and transport costs, They don't just stay there, they filter down. They hit consumer markets. That's where you get this potential inflation shock people are talking about. It puts immense pressure on central banks everywhere.
So everything gets more expensive.
Pretty much. Think about it. Almost every product we buy, phones, food, clothes, it relies on global shipping. A Hormuz closure effectively adds a hidden risk tax onto all of that. It's a widespread, insidious kind of inflation that hits everyone's wallet. And the impact on Asia, it would be particularly severe. Countries like China, India, Japan, South Korea, they get something like 80 to 90% of their crude oil imports from the Gulf through Hormuz. They are incredibly exposed.
80 to 90%, that's staggering dependency.
It really is. Take India, for example.
Hmm.
Imports around 2.1 million barrels a day, and over 40% of its total oil comes from the Middle East, much of it via Hormuz. And their trade with West Asia is already significant, about $8.6 billion in exports, maybe $33 billion in imports. It's already under strain because of regional instability. And this uncertainty, it affects everything regionally. Sea routes far beyond Hormuz, the Red Sea situation, general Gulf shipping, even the economy in places like Yemen. Political risk scores go up across the board. And there's another angle here, one that often gets missed. The impact on Central Asian energy exporters. Think Kazakhstan, Turkmenistan, Uzbekistan.
How does it affect them if they're not directly using the strait?
Well, it highlights that dominant effect, you know? Global choke points ripple outwards. Even landlocked nations feel it. They could face major challenges rerouting their own exports if traditional routes or markets get disrupted. They face price volatility for what they sell. It can cause a real economic slowdown for them. And then that spills over into wider commodity markets, forces countries to rethink their trade strategies, maybe diversify faster, and can even cause currency instability in those regions. Plus, on the pure security side, you have the risk of the conflict spreading within the Persian Gulf itself. Iran could potentially use missiles, sea mines, drone swarms, asymmetric tactics to disrupt shipping more broadly.
It's quite incredible, really, how many layers of vulnerability this one narrow waterway exposes across the globe. So, with all these potential consequences, these huge ripple effects for the global economy, what are the main players actually doing right now? What are their strategic calculations? How are they trying to navigate this unfolding crisis?
That's the crucial geopolitical chessboard, isn't it? Looking at the major players. The U.S. and its key allies, well, they're strongly opposing any closure. They likely view it almost as an act of war, potentially justifying military action, or at least preemptive moves to keep it open. Freedom of navigation is paramount for them. China, being such a massive energy consumer, has a different priority. They're urging restraint, de-escalation. Their economic stability depends heavily on that steady flow of oil and gas through Hormuz.
Right. Self-interest dictates their stance.
Exactly. Then there's Iran itself. It seems likely they're using the threat of a blockade primarily as leverage, a tool in negotiations, a way to project strength, a full, sustained closure. Most analysts think that's unlikely because it would cripple Iran's own economy too. It would be a form of significant self-harm. And India, knowing how vulnerable it is visibly accelerating its efforts to diversify energy sources, looking more towards Russia, the U.S., other suppliers. Plus, they're building up their strategic petroleum reserves to act as a buffer against shocks like this.
Okay, so we have the players and their likely moves. Looking forward then, how could this actually play out? What are the potential paths from here? What kind of outcomes should we be mentally preparing for?
Well, we can probably sketch out three broad scenarios, sort of best, middle, and worst case. The best case. That involves intensive diplomacy kicking in effectively. Negotiations lead to de-escalation fairly quickly. Supply disruptions are minimal, maybe some temporary jitters, but the flow continues largely uninterrupted. Market fears would subside relatively fast. Then there's a kind of mid-case, more drawn-out scenario. Here you'd see intermittent disruptions, maybe minor clashes, continued high tension. Oil prices would likely spike periodically, maybe settling in a higher range, say $90 to $110 a barrel for a while. Insurance costs stay elevated. Global economy faces this persistent risk of inflation. It's a state of ongoing anxiety, basically.
A sort of simmering crisis.
Exactly. And then the worst case scenario, this is the one everyone fears, a full closure of the Strait of Hormuz, even if only for a limited time, that would trigger immediate severe oil price surges. We're talking the $120 to $150 range, maybe even higher in initial panic. It would cause a massive shock to global supply chains and very likely push already fragile global economies towards recession.
It really underscores how volatile things are. This situation is incredibly fluid, changing day by day. As we wrap up this deep dive, it seems clear that just staying informed, keeping a close watch, is absolutely essential right now. And it really does make you think, doesn't it? We talk about geopolitical strategy, millions of barrels, billions of dollars, but ultimately this affects families filling up their cars, businesses managing costs, people trying to heat their homes. It brings these huge global events down to a very human level.
It certainly does. And for listeners wanting to track this, the key things to watch are any decisions coming out of Tehran's Supreme National Security Council, will they actually act on the parliamentary vote? Also, keep a very close eye on U.S. policy moves and statements over the next couple of weeks. Their response will be critical in shaping what happens next. China's diplomatic efforts are worth watching too. They have a huge stake in stability there. And finally, look out for any real developments on alternative trade routes. Are those pipelines via the Arabian Sea or the Red Sea actually viable options? Could they offer any kind of long-term relief if Hormuz does become compromised? Those are the main indicators.
So a lot to keep track of. It leaves us with a pretty big question to ponder, I think. If one single narrow passage, like the Strait of Hormuz, can wield this much global power, if it can create such massive economic and security risks seemingly overnight, what does that really tell us? What does it reveal about the hidden vulnerabilities, the fragile connections within our deeply interconnected global system? And maybe more importantly, what could be done not just here, but globally to proactively prepare for similar kinds of choke point chaos in other parts of the world in the future? Definitely something to think about long after this deep dive is over.